Alright, so I was reading this recent update by P.N. Gadgil, the jewelry company, and it says they've recorded their highest single day sales of almost 140 crores on this Akshay Tithya. But what caught my eye was this line. From a volume perspective, the gold segment saw a 1.46% increase in quantity, while silver volume surged by 90%. 9-0. That's quite a jump, isn't it? And while one understands that this has partly to do with gold prices that are getting into that unaffordable range, it also indicates the growing acceptance of silver as jewelry, and not just jewelry, but also as a credible investment vehicle through financial instruments like ETFs, digital silver, and mutual funds. In this video, we'll dive deeper into the investment side of silver as we look at what's driving this demand for this metal, how has silver performed over the years, the factors one should currently evaluate to form a basis for investing, and of course, the best ways of investing in it. Let's begin. So, silver has had a long history. It's been used as a store of wealth for over 5,000 years, and even now, the UK's Royal Mint produces legal tender containing 1 ounce of silver of 99.99% purity. Another use of silver is, of course, jewelry, and recent excavations at Rakhigadi shows how the Harappan civilization used it for making ornaments and utensils, and this was some 7,000-8,000 years ago. However, in the modern era, silver's value, utility, and demand is largely industrial as it increasingly finds its way into our laptops, mobile phones, space explorations, and even renewable energy solutions. For instance, EVs, electric vehicles, use twice the amount of silver as compared to vehicles that run on an internal combustion engine, and we all know where EVs are heading. Likewise, silver is a vital component in the making of solar panels, with a typical 5 foot by 3 foot panel containing up to 20 grams of silver. So, to draw a comparison with its wealthier cousin, while gold is used more for jewelry and as a reserve by central banks around the world, a majority of the silver is consumed in real world applications, which brings me to a real world question: what drives the value of silver? The first is, of course, demand and supply, more specifically supply. And with mining not keeping pace with the requirements for the past few years, the price of silver has been in an uptrend for some time now. Specific to India, and with demand rising in all three, actually all four areas, that is, jewelry, manufacturing, EVs, and solar energy, it comes as no surprise that our country imported some 7,600 tons of silver in 2024. The second driver for silver is industrial output, and one number to look out for is the JP Morgan Global Manufacturing Purchasing Managers Index. And if this index is on the rise, then the demand for silver and therefore the price of silver also goes up. And the third driver of note is the level of inflation, and generally the price of silver has shown an upward trend whenever there are inflationary conditions. Now, in terms of performance, the price of silver has been all over in these past 30 years. In the 1990s until the year 2004, it was a period of flattish stability, that is, the price of silver didn't go anywhere. This was then followed by 6 years of rapid acceleration, with the price rising by some 600%, especially in the years 2009 and 10, when it went up by 50 and 70% respectively. From 2011 until 15 was the great crash, with prices declining by some 70%, and since 2019 we are again seeing a period of growth, with silver delivering a price return CAGR of 20%. Point blank, silver is most definitely a volatile commodity, and if one connects it back with those three drivers I explained earlier, the supply, the industrial output, and inflation, the timing, as in your point of entry, is extremely crucial in determining how much returns you can make from silver as an investment vehicle. So, if you get it right, there's a lot of money to be made here. But even if you're a buy and hold kind of an investor, silver has offered returns in the 9% range over long periods of time. That said, I guess the performance part is a lot like gold, which has also delivered the same 9-10% over the long term. And much like gold, silver too has the tendency to provide strong protection at times of crisis, like what we saw during the recent COVID pandemic, the global financial crisis, at the start of the Russia-Ukraine war, and most recently with the announcement of tariffs. So essentially, silver's weak correlation with equities is why investors pick more of it when the stock markets are volatile. And when measured against gold, one finds silver to have a moderately strong positive correlation, which means they tend to move in the same direction. Okay, before we look into why this may or may not be a good time to invest in silver, let's start by examining the different modes of investment. So, firstly, we have physical buying, jewelry, bars, biscuits, silver coins. These are all very popular, and you can get these at any jewelry store, Tanishq, Kalyan, Malabar, etc., and also from online stores like Flipkart and Amazon. While this form of silver is perfect as an ornament, a decorative piece, and it definitely makes a wonderful gifting solution, it's not very suitable for investment given the cost of polishing, storage, and a not that impressive resale value. In terms of financial instruments, investors can purchase digital silver via companies like MMTC PAMP, DigiGold, Augment, etc. But just be wary of the regulations and the spread between the buy and sell price. Then there are silver futures and derivatives. You can read more about it on Multi Commodity Exchange MCX that offers the service. Another option is to opt for stocks of companies that are into silver mining, like Hindustan Zinc, which is the world's fifth largest miner. And finally, there's the option that I prefer, that is silver related ETFs and mutual funds. Let's spend some time on this. Now, this may come as a surprise, but it wasn't until September of 2021 that the SEBI, the Securities and Exchange Board of India, allowed mutual fund companies to offer silver based financial products. In fact, the first silver ETF was launched only in January of 2022, and as of now, there are 15 offerings in the ETF space, with a few more expected, including this one by Groww Mutual Fund, whose NFO closes on the 16th of this month. So, what exactly does a silver ETF do? Well, very simply, it tracks the domestic price of silver. So, if the price of silver goes up, the ETF NAV goes up. If silver goes down, the ETF also goes down. And this way, investors get an opportunity to participate in the movement of silver without having to hold any physical metal. But that said, these exchange traded funds are themselves required to invest in physical silver, which is done in 30 kg bars of 99.9% purity in conformity to the daily spot fixing price of the London Bullion Market Association, which is what the SEBI prescribes. Of course, as an investor, you don't have to buy 30 kgs worth of silver, and the ETF takes care of that by fragmenting it to as low as 1 gram of silver, which as of today is exactly 100 rupees. It's a very simple product. You can buy it during market hours from your trading account. And although silver ETFs have been in the market for just 3 odd years, there's good traction here with the aggregate AUM already at over 15,000 crores. Let me also address some questions, some concerns that often pop up. The first one is the expense ratio, and most ETFs, or at least the ones I've tracked, tend to charge between 0.4 and 0.5% in expenses. Secondly, there's the point around liquidity, and a good way to assess volumes for every ETF is by examining this page on the NSE India website. Again, unless you're dealing in crores of rupees worth of silver ETFs, I think you're more or less sorted on this front. A third inquiry is on the impact cost, or trading efficiency as it's also called. And again, the NSE website does a good job of identifying that bit, which frankly should not be a botheration. Of course, if you want a deeper understanding of ETF specific metrics, what they are, what's the significance, how to calculate the taxation bit, etc., then do watch this previous video of mine. But to very quickly list the benefits of investing via silver ETFs, we have accessibility, and one can buy a unit for as little as 100 rupees from your trading account. There are no making charges like one has with physical jewelry, no storage costs like a safety box or a bank locker. Silver helps with diversification, so in addition to equities, having some of your assets in gold and some in silver is rather helpful and is prescribed by most financial planners. The ETF itself is backed by physical silver, which is 99.9% pure. These ETFs have adequate liquidity. The expenses are on the lower side. Buying and selling is super easy, and so much more. As I said, there are too many options in the market today, and if you're looking for one, do explore the Silver ETF by Groww, whose NFO is currently live and is closing on the 16th of May. Of course, you can buy it after the NFO also. So buy it now, buy it later, it's all fine as long as you've read the scheme documents carefully, and please do consult with a financial advisor before making any investment decisions. Alright, so this last part is probably the most important one. Is this a good time to invest in silver? I've done some research around this, and while everything is a probability, there are probably more positive factors right now as compared to negatives. For instance, when we go with the demand and supply, what we are seeing now and for the last 3 years is the biggest supply deficit in the history of silver as production struggles to keep pace with industrial demand, especially from EVs, military equipment, and of course, solar panels. In fact, I was reading an article the other day that says the production of solar panels might take up 85 to 98% of the world's silver supply by 2050. A second driver affecting silver prices is the current geopolitical environment, wars, conflicts, tariffs, recession. I mean, there's a lot happening which gives investors like us a big enough reason to keep some of our assets in safer places like precious metals, gold, platinum, palladium, and of course, silver. And thirdly, there's the gold silver ratio, which is simply the current price of gold divided by the current price of silver. With silver presently at 100 rupees a gram and gold at 10,000 a gram, we are currently at a gold silver ratio of 100. So 100 is a bit on the higher side, and if one goes with a long-term average of 60, it indicates that perhaps silver is undervalued now and probably gold is overvalued. Of course, one can't base an investment decision on just one or two factors, but from what I've read, multiple tailwinds are starting to align in favor of silver, and there's definitely some warmth building around silver as an asset class. I'd encourage you to read more about this, and if keen, explore investing in silver via financial instruments like ETFs targeting between 5 and 10% of your portfolio in commodities like gold and silver. I leave that decision to you, but I sincerely hope you learned something new today. Once again, thank you for your time. Do like this video, subscribe to my newsletter, subscribe to my channel, and I'll see you very soon. Until then.